Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Revolve Renewable Power Corp. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Mike Clark, Chief Executive Officer of Revolve Renewable Power Corp, which trades on the OTCQB venture market under the symbol REVVF and on the TSXV under the symbol REVV. Welcome, Mike.
Thanks, Matt. Appreciate it. Well, thanks everyone for joining. It's great to be here. And as some of you may know, I am relatively new to Revolve Renewable Power. I joined the company as CEO about a month ago, really to augment the management team, which is still fully involved. The former CEO is now the exec chairman, and our president based in Mexico. So really strong team that I'm really joined to help to augment and hopefully move a lot of these projects forward and create some nice buzz in the capital markets as we move forward. So I'll run through the presentation. I see there's a couple questions already popping up. I'll definitely answer those as we go through, perhaps as we touch on those individual projects that are mentioned, but happy to answer any questions at the end as well if anyone has any. So a couple of disclaimers here. Please take a look at these and review them at your leisure. And if you download or have access to the presentation, you'll see those as well. Just important in terms of some of the projections that we're making. Obviously, they are projections, and there are some disclaimers there. So Revolve Renewable Power, who are we and what do we do? Well, we're a revenue-generating, renewable-focused IPP. So what does that mean? We essentially develop projects from early stage, take them through the entire development process, build and own and operate them. And depending on the size and the type of project, we do that at various stages, either from greenfield, meaning from origination, basically from a plot of land, or we acquire a project at various stages along the development path, or we potentially acquire operating assets as well. And so we've done sort of all of these in terms of the types of projects that we are currently focused on. We're focused in 3 different jurisdictions, being Canada, the United States, and in Mexico. We have a footprint with operating and development assets in Canada and in Mexico, and we have development stage, late stage development projects in the United States as well. So a really nice, diverse portfolio of projects across jurisdictions, but also in terms of the technology. So we're not focused on one, we're agnostic in terms of renewable technologies. We have wind projects, solar projects, and battery energy storage projects as well. And that really highlights that diversified investment strategy for investors. We do a fair bit, but we are focused on what we do well, which is assessing opportunities and moving them forward and up the value chain so they create value for investors. And of course, that is also all really underpinned by a foundation of assets under operation that generate long-term recurring revenue. And we'll touch a bit on that further on in the presentation as well. The management team, including myself, have done quite a bit of the business, been involved in the renewable space personally for almost 20 years, primarily in the US and primarily in solar, although also have a history in utility scale wind development in Canada. And our team at a senior management level has developed more than 1 gigawatt of assets and then sold them in the US and developed in Mexico and Canada. And so bring a lot of renewable experience, but also project finance experience to the table. So we're not just about putting these projects together. We're about putting together all of the constructs, be it financial, be it permitting, be it construction, so that we can get to the stage where we own and operate them and generate that long-term recurring revenue for the company. And this, again, is all sort of underpinned as well by the growth opportunities that we see in the M&A space. There are a lot of distressed assets in terms of companies out there that have non-core assets that we're looking to acquire, be they late-stage development or operating assets as well. When I say distressed, I don't mean in terms of the quality of the assets, just in terms of the owner's ability to continue managing them or their desire to exit from those types of opportunities. So we're seeing quite a few opportunities in the M&A space. And if anyone has followed us over the last couple of years since we went public in 2022, we've acquired a couple of projects, development stage. We've acquired some operating assets. So we've done it before, and we definitely intend to do it again. So Revolve at a glance, as I noted, owner-operator, developer projects with a diverse portfolio, North American platform, and a good track record with that revenue-generating foundation underneath. And when you look at our financials from Q1, which I'll touch on in just a moment here, it really underpins that upside for us. We are a company that generates revenue. We're an operating company, but we also have really nice upside in terms of the development stage projects and the late stage development projects that we have as well, which really provides some nice upside for the company and for investors, obviously, in the long run. So if you look at the projects that we have at a glance, the blue projects there are operational. So we have a couple of run-of-river projects in British Columbia in Canada, a wind project in Alberta in Canada, and then some distributed generation projects in Mexico. And so the DG, or distributed generation projects, are essentially either solar or battery storage, smaller projects that are usually built on site for a commercial customer on the rooftop, whereby we sell them electricity and we generate that long-term recurring revenue under a power purchase agreement, or sometimes a cost savings mechanism in the case of the battery storage projects. So we continue to grow those out, and we actually have a couple of megawatts, almost 3.5 megawatts of projects under construction right now. The permitting is taking a little bit longer than expected, but we still expect it to be operational or have some resolution in 2025 without a doubt. So we're going to be adding to that recurring revenue base in the short term for those projects. And then beyond that, as you look at those development stage assets, some of them are late stage and are quite exciting. One is the project in Alberta, which we recently completed the acquisition of, a total of 30 megawatts, about a 20 megawatt first stage, which is in the sort of final permitting stages right now. I was at a site visit there late last week, a really exciting project. Close access to the distribution network, so no interconnection issues with it, which is oftentimes a challenge for renewables projects or just power projects in general. A great site with one landowner, so very supportive community as well with respect to that project. The other interesting late stage project is a wind project, and that was a solar project in Alberta. A wind project in Colorado that we very recently announced the interconnection agreement on. And if you know renewable projects, and again, power projects in general, transmission and access to transmission is a key constraint for any project. Once you site it and you have the appropriate resource in place and you can generate electricity, you have to get it to market. And so that is often a key constraint. For the project, the Primus project in Colorado, for us, we just signed that interconnection agreement, so that allows us to get that electricity to market. So it was a massive milestone for us, and because of that, we believe that project, which is a 50 or 49.6 megawatt project, will hit ready to build status in 2025. So you include that, the Alberta project, and a battery storage project as well in Utah. A slightly smaller one, all ready to build potentially in 2025. And we see a pretty interesting upside for this company, where we right now have about 11 megawatts of net operating assets. Those will bring online, another 100 megawatts in the relatively short term. So pretty exciting upside. So in terms of some of the catalysts moving forward, over the next 12 months, increasing revenue and cash flow. We'll see the full year revenue recognized from those operating assets right now. And then as additional new distributed generation projects are brought on board, those will contribute to that cash flow. The continued M&A activity, we're currently looking at a number of different opportunities in the space. And obviously, if and when those come to fruition, they'll announce them. But we do see a lot of interesting opportunities out there for acquisition. The US and Canadian utility scale, I touched on the Alberta project and the Primus project. Those are moving full steam ahead in terms of the permitting on those. On the utility scale in Mexico, on that last chart as well, you would have seen quite a number of projects in Mexico, utility scale projects that are at sort of mid-stage and pushing towards late stage. There has been a change in government in Mexico, which is positive for renewable energy, without a doubt. Waiting for a few key regulations to be finalized before we sort of reassess those utility projects. But it's safe to say that we're pretty excited about them, given the change in government and the stage that those projects are at. Big projects, 100 megawatt, 400 megawatt, so substantial projects that, as we get them to the stage where we're ready to build, a 400 megawatt project, that's over $1 billion in capex. Likely a project we would look to sell or partner on, and potentially recycle some of that capital into the projects then that we would own and operate. And then in terms of the one final bullet point there on the NG sale. So if anyone doesn't know, we had sold a project in Arizona to NG, a utility developer, a couple of years ago, essentially. And this project, or these projects, were about 1.25 gigawatts, would feed into the California market, extremely attractive. We've already received milestone payments in the range of 5 to 6 million US, and there's still 45 to 55 million in value still to be realized by Revolve. The timeline on that is not tomorrow, because we've sold the projects and NG has continued to develop them. But we have a pretty high level of confidence that they're going to be moving these projects forward, given what they've spent to date, and given what we know about the markets, obviously, in California, and the value and benefit of these projects. So again, some pretty interesting long-term, medium to longer-term upside with respect to that incoming cash potentially. So if we look at the financial highlights, so for Q1, our fiscal year end is June 30th, apologies. And so we booked revenue of $450,000 US. We report everything in US dollars, which is a really strong quarter for us, a significant increase over the same period last year, as projects that we had acquired as part of an M&A transaction came online, and we started to recognize that revenue. Good, strong margins associated with it as well. If you look at it on an annualized basis or a run rate basis, anywhere from 1.8 to 2.2 million in recurring revenue that is derived from those operating assets. So if you think of that, what that represents, that really is the baseline in terms of this business right now. We'll continue to add to those as we complete the construction on those other projects that I mentioned, those smaller projects. So we should see that number increase. And then there's also the potential to add to that revenue if we decide to sell any of the utility scale assets. Those are decisions we make or we assess at least on an ongoing basis in terms of value in the market for those types of utility assets. And that's really what contributed to that large number last fiscal 2024, where we had 6.7 million in revenue. A big chunk of that was from a milestone payment from that NG sale that I'd referenced earlier. Also look at the operating base, 11 megawatts, 3.45 in construction, and then the 100 megawatts targeted, ready to build in 2025, which is the Alberta project, the US project, both on the wind and the battery storage side. We like to focus on the recurring revenue, absolutely, because it provides a great foundation for us. We're not a yield co, though, right? And so ultimately, we want to see significant growth over the next year to 2 years and ongoing. But this recurring revenue stream really differentiates us in a market where you see a lot of pure developers who don't necessarily have these types of recurring revenue streams, which is great for our top and bottom line. It allows us to be very selective in terms of the opportunities we pursue on the utility side and on the M&A side. So we've seen that increase, obviously, over the last year or so, and we expect to see that continue into 2025 or fiscal 2025 as well. Bit more detail on the operating portfolio in terms of the exact sizes of the projects and under construction. And if anyone needs this presentation, I'm obviously happy to provide it to them if it's not available on this site. So the corporate strategy, I've talked a bit about it, but here it is on one slide. Really, it is to transition from that pure development company to becoming an owner and operator of renewable energy projects, which we are in the process of doing right now. We're definitely, we've passed the inflection point. You know, the most difficult stage is that first piece of the puzzle, either acquiring or building your first project, getting that into the portfolio and operating. We are now an asset manager for a variety of different projects. And so now it's about bolting on these additional revenue generating assets to the company and continuing to grow those projects under development, which ultimately have higher returns. They just take a little bit more time. So this nice balanced approach gives us that near-term cash combined with the long-term significant upside that I think most investors obviously want to see. So here are the targets that we've put out there. Everyone takes a look at the medium-term target in terms of the U.S., the revenue number, and when. What the question being, is that a year from now? Is it 2 years from now? And it's somewhere in that range. If you look at that US 15 million revenue number, that would include the projects in Alberta and in the US, or at least 2 of them. And so that's the sort of timeline to get to that number from those utility scale projects. However, it's not binary. We're not going to go just from the 6.7 to 15. There's going to be growth in that distributed generation portion of our business as well. So we're going to tack on 500,000, another 500,000 in terms of annual revenue as these projects come online. So there will be growth within that gap between actual fiscal 2024 and that medium-term target. But rest assured, we're doing everything we can to accelerate that process to get there and beyond, obviously, as fast as possible. So how do we get there? You know, the organic growth is a big piece of it. Definitely the assets in Alberta and in the US and in Mexico contribute to that significantly. Our M&A strategy, which we have carried out in the past. We have acquired a project in Alberta. We've acquired the operating assets in Canada. So we have a tried and true method of how to identify and then execute on these projects. We focus on projects that are within our not just our skill set, but our financial ability to execute on. So we're looking at projects in that sort of 10 to 20 megawatt range. That we can bring our specific skill set to and add value either on late stage development projects or for recurring revenue. Obviously, we want to bring those on board as quickly as possible. In terms of the strategic sale of larger utility assets, you know, the NG projects are really illustrated the value of these types of projects to larger asset owners and developers. And we're always assessing the opportunity to execute on those types of project sales on the larger assets. So those 100, 200 megawatt type projects, recycle that capital into the projects that we can then own and operate. We really want to do as much of the development work as we can to generate as much value as we can. There's value in them right now, without a doubt, that I don't think is recognized in the market, but clearly we want to get them to a place where we can extract peak value from the projects. We have a long track record within the industry. The company, while it went public in 2022, it was founded in 2012 and has had a long track record of developing projects, selling projects, getting projects to NTP, notice to proceed, or RTB. And so it's a pretty strong team for such a small company. You know, my background, as I mentioned, is in renewables over the last 20 years. And I think, I know one of the reasons that I wanted to join this company was because of the team that's in place. Ultimately, that is what dictates whether a company is going to be successful or not. And I was excited to join the Revolve team. And the more I get to know the company and the people, the more excited I am about it. So let's talk a bit briefly about the business units. I've sort of described some of the projects at a high level, but we kind of break them down into 2 real business units. There's the utility scale, which are those projects that will ultimately sell electricity to a utility. They range in size from 10 megawatts all the way up to several hundred megawatts. And they can be wind, solar, battery energy storage. If we are developing them ourselves, from greenfield, it takes a few years. And so there's an investment that's required in that to get them to the place where we can either sell or partner on them. As mentioned, those larger projects on the utility scale, more likely to sell or partner on those big projects. The smaller projects, we absolutely want to own and operate those ourselves. On the distributed generation or DG side of the business, smaller projects, again, rooftop solar, battery storage, not wind, but they have a much shorter development timeline. So you're essentially selling it to a business owner or a commercial customer who can see the benefit of offsetting their electricity usage through renewable energy. The time frame, 6 to 9 months, can even be faster than that, depending on how fast the customer wants to move to actually construct these projects. Takes a couple of months at most because they're smaller and they're easier to permit. You don't have the same challenges around transmission that you do on the utility scale. So it's a nice mix. You're still long-term cash flow. They are smaller projects, so you have to build more of them to get to the same bulk. But for a company of our size, it's an optimal mix. You have these smaller projects that are cash flowing as you start to build out these larger utility scale projects, which is quite interesting. And it's a really good mix for us as a company, and I think for investors as well, that we're cash flowing, we're generating revenue, we're seeing strong margins, but we're also investing in projects that will give us that sort of home run in the long term. That's what we see on the utility scale business aside, in terms of the returns. It takes 3 to 4 years to develop a project, but you don't really have to invest a significant amount before you get to that sort of construction ready stage. It is people power, it's brain power, it's understanding where to develop projects and how to develop projects until you get to the stage where you have to start putting interconnection deposits down and bonds. The cash outlay is not significant for the return, but it's all risk capital, and that's why you get a nice return on the projects when you eventually sell them. And so that's why we like the utility scale. And this is really illustrated by that sort of peak valuation, the valuation we got from the NG projects, which is great. Now that's a gigawatt size project, so $1 billion project. So we probably won't replicate that from a scale or size perspective, but from a per megawatt metric, we absolutely hope to replicate that again. And then on the DG side, that's a really typical type of distributed generation solar project. A project origination is a little bit different. It is basically business to business. So you're talking to business owners, convincing them or showing them how they can save money on the system, and then signing either a power purchase agreement or a financing agreement whereby there's a cost sharing or cost savings sharing mechanism for these types of projects. Market overview, we're in the US, Canada, and Mexico, and I see a question about the US. I'll touch on that as well, definitely. We really like the diversity. If any of the jurisdictions we run into challenges, we can refocus our efforts. But safe to say, we're pretty bullish on all three jurisdictions right now. Our nearer term projects are in the US and Canada, but that could change very quickly with the change in government in Mexico. The management team, I'll let you guys take a look at that at your leisure. Some of the key people involved are Steve and Omar, who were founders of the company, still intimately involved in the company, and bring a lot of development and financial expertise to the table as well. And I'll let you guys sort of peruse that at your leisure. Capital structure, pretty tight. We have 63 million shares outstanding, $15 million market cap right now, up to 60%, approximately 60% insider held. Management and insiders. So a really nice tight capital structure within the company, which I think bodes well moving forward. There's a couple of appendices that you can take a look at your leisure, just a bit more detail on the project portfolio, the utility scale operating assets, and then the DG operating assets as well. So what I'll do is I'll jump in to the questions here. If you just bear with me for 2 seconds, I'll pull up the questions. One of them is, when can investors expect CapEx estimates to be provided for the 3 utility scale projects that we intend to own and operate? So the CapEx on those will be determined pretty much at the ready to build stage. that ready to build or notice to proceed stage is basically when you have all of the quotes and the CapEx numbers put in place, the financing potentially put in place as well, and it's all locked down. I can talk in generalities, definitely, about sort of the cost or the CapEx on a per megawatt basis for wind and for solar. Understand, of course, that it definitely changes per jurisdiction. So we don't release those CapEx numbers right now for those projects because we don't know them, because it's all to be negotiated. But in terms of, if you look at utility scale projects in or across the board in Mexico, generally cheaper, in terms of renewable projects. For wind, a little bit higher on the CapEx side, so definitely over $1 million a megawatt, whereas solar, potentially around $1 million a megawatt. In the U.S., a little bit cheaper than in Canada, just more access to larger scale EPC companies and bidders, and increasingly increased access to materials that are onshore that can take advantage of some of the tax credits around domestic content. So, on these utility scale wind projects, anywhere from $1 million to $1.2 million or $3 million a megawatt capex, and this is all just very, very high level in general. Again, a little bit cheaper on the solar side. On Canada, a little bit higher costs we're seeing on both. So hopefully that answers the question. I know people want specifics on capex, but we don't like to provide that sort of direction right now, given that there are so many variables that go into it. Suffice to say, though, that when you talk about the capex of a project, so say it's a $100 million project, that's not all equity. So, as a small company or a micro cap company, we wouldn't be able to inject equity into a $100 million project at our current stage. However, for a 50 megawatt project, a 20 or 30 megawatt project, you think of the sort of capital stack, long-term debt is a significant piece of it. Again, depending on the economics of the project, you can get absolutely over 50%, 60% senior debt on these projects. In the United States, there are tax equity investors as well. So one of the big components in the US in terms of incentives relates to tax equity. There's basically a dollar for dollar tax credit that's available. For companies that don't have that appetite, you bring in third-party tax equity investors who contribute up to 30% of the capex of the project in return for those credits and some of the cash flow over the first few years of the project. So if you think of the equity requirements, you're at the sort of maybe 20% range. And so it's not as huge of an amount in terms of cash that's required. And so as we go through the process of getting to RTB on these projects, we'll be clarifying those numbers, obviously in terms of senior debt, in terms of tax equity component as well, but also in terms of the equity and what we have on hand, if we have utility sale proceeds to be able to recycle and inject into these projects. And obviously communicating that to the market. So, stand by on that, but they are discussions that we have on an ongoing basis internally. But the goal is to own and operate those small to mid-sized utility scale projects ourselves and not sell them off. But we do have flexibility, obviously, as we continue the development. Question here about the expected economics on the Vernal project, similar to the 2 megawatt hour BESS study. Yes, similar to that. I haven't taken a deep dive, I'll be honest, into the Vernal project economics, but I'm happy if anyone wants to follow up with me offline on that, and I'll provide my email and contact info. Happy to chat about that as we get that project closer to RTB as well. A question, any expectations of change in profitability with U.S. projects given the change in the federal government? And we get this question a lot, definitely, given our exposure to the U.S. I would say no. At this stage, there is always risk. And I think the markets, meaning the capital markets, have kind of overreacted a bit to the election. A lot of the incentives that are in place right now, at least federally, relate to the investment tax credit. So that 30% tax credit that I mentioned. That tax credit has broad and has had and does have broad bipartisan support in Congress. And so we don't anticipate anything happening with that in the short or medium term. A lot of the benefits that flow from the IRA, the key piece of legislation that extended those credits, a lot of the benefits actually flow to red states or historically Republican states, because there is increased development of battery storage, battery plants, manufacturing plants, domestic manufacturing for solar panels and wind components. And so that's a piece that we always watch in terms of the election. But really, the underlying economics of renewables, the train has left the station. They're profitable, and they make a ton of sense without incentives. But the incentives really just drive domestic manufacturing for the United States. And so I think it ties into a lot of what we're hearing right now in terms of the federal government, or the incoming federal government, in terms of wanting to generate economic activity within the U.S. That's what these tax credits do. So it's always a risk, and we pay close attention to it. But the late stage nature of the projects that we have, both in Colorado and Utah, the battery storage project, I wouldn't anticipate it would impact the profitability of them at all at this stage. But obviously there are caveats to that, but hopefully that answers your question. It's not something that keeps me up at night. That's for sure. You're working to power any data AI centers. Where do you see demand coming from over the next 5 years? So without a doubt, data centers and AI are going to prove a huge challenge for the power industry in generally globally, and particularly in the US and Canada. In Alberta, interestingly, they just came out with a plan to develop, I think it was about $70 billion worth of data centers over the next 5 years is what the type of investment they're looking at. This is where a lot of the demand is going to come from. Now, data centers have to have uptime, 100% uptime basically. Do renewables provide that for them 100% right now? Probably not, but we are in the transition period where it will start to provide that with battery storage. Now, having said that, what you're seeing is a lot of the current electricity that is available is being sucked up by these data centers. And so you need to fill that in somewhere else, for homeowners, for other businesses. The demand for power is, I think, already insatiable, and is going to become even more so over the next 5 to 10 years, as even more of what we do is online. It's all data center driven. And so the demand, I couldn't even put a finger on the demand. And so there's enough room for everybody in this market scenario. Being, we're obviously committed to the transition to renewables, clearly, but there's going to be a huge demand for power everywhere. We're not connected to any specifically, other than we are connected into the utilities, who ultimately, and in most cases, have to supply those AI or data centers as well. So in that sense, we're not connected to them. However, in a place like Alberta, there's potentially the option to sign power purchase agreements with those commercial entities, because it's an open market, basically. So I have a question here. What is your cash flow? And so I'm not exactly sure what that means, but in terms of our revenue and our run rate right now, it is on an annual basis. We're projecting between 1.8 to 2.2 million in recurring revenue over the life of the project. So those are 10, 15, in some cases 20-year projects under contract. So that's the current run rate for us. That's the bare minimum. We'll be adding to that as we go through 2025, as well as those construction projects complete for that. And so it's a good, strong, stable base of recurring revenue. And how do we finance our projects? So it depends on the types of projects. For the smaller projects that we bring online, we balance sheet finance them, or we acquire debt in the marketplace. If you look back at a few of our press releases, we've acquired debt from a group called RE Royalties. And so we use them for acquisition financing, and it's project specific. So it's tied to those projects, which is nice. So non-recourse debt. A lot of the debt that you see on our balance sheet is not corporate. Well, it is corporate, but it's not. It's in a sense, but it's non-recourse, so it's tied to the individual projects, and that's really how we have financed those acquisitions moving forward. Generally speaking, it's a combination of debt and equity. Depends on the strength of the project, how much you can lever that up. You always want to use as much debt as possible, assuming it's a reasonably priced debt. Construction finance plays into it as well, so a mezzanine piece potentially, depending on the project as well. So there's a variety of different ways to finance these projects. As I said, the smaller ones on the balance sheet because we build them out ourselves, or a company that provides us with that sort of 1 to 2 year debt financing that we then take out at a later stage and replace with lower cost financing from a bank or that type of facility. So it varies. And I don't see any more questions. And so I guess I'd like to thank everyone for their time today. My contact info is there. It's ir@revolve-renewable power or MYKE, so my first name @revolve-renewable power. Happy to jump on a call with any investors, shareholders, people who want more information, and I appreciate the time today.